The theme is that the big consumer banks are taking a beating as the economy is so uncertain that they're not sure that they can reduce their reserves. There's a real worry here that these credit losses will go well into next year. But the trading businesses, as we've seen, are doing okay. We have JP Morgan posting major gains. We have Goldman posting major gains. And if you take a look at this chart here, you see they're rising very significantly. And you wonder about how much market share they are really taking. Goldman coming in just shy of JP Morgan in terms of percentage increase as their equities fell a little lighter than expected. But all in all, Goldman is the one that's the real standout here, John, because they're able to post returns above 17% when it comes to return on equity. It's a real turnaround story, and it's a real difference from what we've seen in the last crisis.
Shanani, great work as always, and you see it in the stock price. Goldman up right now, 2% ahead of the opening bell. Piper Sandler's banking analyst Jeff Harte joins us now on the phone. He's bullish on most of the big banks, with overweight ratings on both Bank of America and Goldman Sachs. Jeff, great to get you with us this morning. I know it's super busy for you, so let's run through things just quickly. Do you like what you see so far?
Yeah, so far I think it's been pretty good earnings, at least from the big banks. I think the concern and what's kind of weighed on banks in general is, people are now looking past credit and kind of figuring we'll get through credit and what's the revenue environment going to look like after that. And sluggish loan growth and low interest rates kind of create some headwinds for banks in general. But when I look at the large cap banks, some of the ones I cover, like Goldman Sachs, JP Morgan, I mean, they, I think, are well positioned to thrive in an environment where revenues are tough because they have scale, and scale will matter more than ever, and they have exposure to capital markets. So that's really been the bright spot as far as revenues have gone kind of since COVID. Both investment banking and trading have been strong, quite resilient, and the backlogs look good. So I think we'll see that kind of strength continue going forward.
Looking ahead to Morgan Stanley tomorrow, Jeff, what are you looking for?
I think we'll probably hear more of kind of what we heard, what we have been hearing both from JP Morgan, Citi, and specifically Goldman today. Very good trading revenues, probably better than expected. Good investment banking revenues with building pipelines. And for Morgan Stanley, I think you'll kind of see that one of the interesting things for them is, they're going to start integrating E-Trade, and then you've got Eaton Vance. You've kind of got some execution kind of risk kind of creeping in there. So that'll maybe make them a little more interesting over the next couple of quarters. But I think we're going to get very solid results from Morgan Stanley's vault tomorrow.
Jeff, just a final question from me on the kind of business model you think is set to succeed through the next 12 months and beyond. Is it the streamlined focus Morgan Stanley, or the more universal model, the big beast, the likes of JP Morgan, etc.? I'm inclined to think in the near term you want to be more kind of overweight the investment banks, be it a Goldman Sachs or a Morgan Stanley, just from a business mix perspective, because they're light on net interest income and heavy on capital markets. But you get beyond that into next year. I think the big banks, the G-SIBs are, at least in my mind, the place to be, because they have scale, and scale matters more now than ever today.